Hello and welcome to today's video, which is called S&P 500 Bear Character, yet surprisingly it talks a lot precious metals, crude oil and copper. So let me help you prepare for the day ahead, what I see unfolding. Remember that the daily analysis are the basis, so I hope by now you have read today's article. Of course, follow me on Twitter and Telegram for rich two-way talk and timely notifications. So, let's start with stocks. They are today part of the premium segment of the article. So, let me share, at least really briefly, what I had made public already and enrich it with the latest action that I see fitting. In yesterday's video I talked the key resistance and timing prospects when it comes to S&P 500 top, so I hope that you have seen and heard the reasoning when it comes to both the slightly above 4,500 at best target and when it comes to time, most probably during next week. It remains simply to be seen whether the buyers will muster some strength, because there is a change underway in the bond market. Yields are rising and not really that much reflecting recession, and the defensive sectors such as utilities and real estate that I had been talking really positively in prior weeks are kicking in, relatively outperforming. You can as well take the stocks to bonds ratio, and you can as well take utilities to stocks ratio, or whereas utilities to financials ratios, to get an inside look at the status of true risk sentiment within the stock market. So let me say that the stocks that were on my watch list yesterday, Google, Meta, well, more so AMD than Nvidia, had not kicked in, and conversely Apple was the stiffest headwind to the market, signaling that something might not be totally wrong, totally okay. And actually Amazon, Tesla, Eli and JP Morgan as characteristic representatives within healthcare, financials and consumer discretionaries were not at their best either, and they are not at their best today still, unfortunately. So that's delaying the one more buy the dip reaction, where the only question mark is when later it would begin. Later. When is the timing of this later? Is it tomorrow, or would that happen only on Monday? That remains still to be seen. And bonds with the dollar, yes, the Euro USD currency pair would provide me with more insights as to the local bottom timing. And one more, all is well going to the upside for an incomplete run to the upside that would be rejected. So today's sentiment can be characterized by not too bad non-farm employment change data. They have been really coming in at over a double of what was expected, and the consequences of yesterday's hawkish FOMC minutes. This marks the topping process as well underway, and it gathered steam across way too many asset classes today. The ES levels and game plan when it comes to open positions. That's part of today's premium analysis, which is reserved for trading signals or stock signals subscribers. So I do encourage you to become one. There is money free guarantee, so try it out and see if it's for you. I think it would be. Let's move to gold and silver. After a promising retracement today pre-market right into the non-farm employment change, we saw them take a hit, and thus far the attempts to stabilize had been unsuccessful. So I still think that metals aren't down and out, that the basing part would likely stop and pause right above 1900, which is not that far, and considering what the dollar is doing and what yields are doing, there are budding signs of resilience within precious metals. Let's not overplay it, because the headwinds are still stiff for now, and both metals have to prove themselves and repel the sellers first. As well, it might turn out to be a task for more than a single day, meaning that today they would not succeed. The open point is whether the downswing in stocks would trigger some safe haven inflows into precious metals. Thus far it's not happening yet either. Larger picture, metals are still basing and need to see which one of the two conditions that I have written comes in probably first. More likely it would be the second one, the stagflation, or inflation proving its resiliency later in second half of this year, rather towards the end of third, maybe beginning of fourth quarter, rather than a Fed acknowledging or reacting to deteriorating data. For now, their effect is balanced out by the still very loose fiscal policy. So we are not yet seeing the true thunderstorms. But that's the sentiment, and that's the very short-term prospects for gold and silver this week. Let's move next to crude oil and copper. The chart belongs to crude oil, and in West Texas the 71 handle is going to last for a couple of days still, more than a couple of days probably, because the OPEC tightening, OPEC plus production cuts versus tightening and reassessments of recession are thus far kind of balancing each other out. And the same goes for the China destocking level. You may remember in late winter the China reopening and stocking in all of real assets. Thus far the economic revival there unfortunately failed to live up to expectations fully, and those excess inventories are currently being drawn down. That's the case especially in crude oil rather than in copper. That's why the copper chart is looking somewhat more constructive, and the 372 level in copper is still holding. But lean weeks are ahead for both crude oil and copper. This is not yet the time to be bullish either of these. Not really. Not really. That would be part of a very long-term positioning to remain bullish commodities and precious metals. Nothing for short-term trades. So the copper chart is, as said, not that badly looking, but obviously the whole CRB index is struggling in the current disinflationary environment, be it both in headline and when I called that last week for you, in core inflation data that are also decelerating. And it's more than a function of shelter pricing. So for now, the headwinds against real assets are still blowing, remarkably blowing. So I hope that you are already familiar with my daily writings and are subscribed on my site, subscribed on YouTube channel for these lengthy and timely updates as the trading day evolves, and that you follow me on Twitter and Telegram. Size terms always apply, beware of impersonators, and be familiar with my rich journey beyond trading and financial world. And obligatory disclaimer to top it off, and let me wish you a fine day.